Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. Before we start with today's training room, let's go through our risk disclaimer as we always do, and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. No matter what trading approach you take, there always will be losses, and it's important to accept that. In fact, there's far too many software companies who never talk about losses, and for you guys who are in our training room regularly will know that's something we do talk about because they always will occur. Right, so we've probably got a few new customers in today, so welcome to anybody who's new to MTPredictor. So what I'd like to do is go through the basics of how we approach looking for setups in MTPredictor. It'll also be a good review for you guys who are a bit more experienced as well. So what I want to do is looking at a chart and say, right, here we are with a chart. By the way, this is our standalone version here, but we do exactly the same approach if you're using our NinjaTrader 8 add-ons. It's exactly the same approach. So I'll probably have a look at NinjaTrader 8 a bit later in the webinar, but the approach is exactly the same. So when you first open MTPredictor, you'll see we have automatic setups on our charts. You can see there by our setups, and also our history triangles. Our history triangles are setups that were there at the time that were filled on the next bar. So in other words, we don't hide anything. For example, here, you can right mouse click on this blue buy bar, do analysis, and that will show you the setup that was there at the time. So, we don't hide anything. That's important. So the first thing to say is we're not a black box system. In other words, you don't take all of these setups you can see on the chart, perhaps in the direction of our MTP trend indicator down here, which is blue for up, black for in the process of making a reversal, and red for down. The idea is not to take 100% of the setups. Why? Because we teach that basic markets are not predictable all the time. In other words, black box 100% systems don't tend to work. They don't tend to work because markets are random half the time. And this is something that very few software vendors will teach. And it's something that I've learned by experience. I've been in the markets, since 1987, so that's 33 years now. And have noticed that basically no matter what trading approach you take, there will be periods when it tends to break down. In other words, it falls apart. Rather than trying to scratch your head and say what's going wrong with the system, I decided to look into it, and what I learned was basically half the time markets are random. You can't do anything with them. So I chose to make the decision to say, right, okay, what we'll do is then avoid the random parts, stand aside during the random parts, and only trade when the picture's clear. Looking back on that now, that seems a fairly obvious thing to do. But most people find it hard because they want to try and predict where the future is going. So of course, you can't do that because half the time markets are random. So the obvious thing is then, I can hear you all asking is, right, okay, if markets are random half the time, how do we know when they're not random? How do we know when the market's in a good position to then be able to make a trade decision? Bear in mind, even if the picture is clear, you will always make losing trades, and that's what we look at as well. So to decide when a market's clear, we look to the higher time frame chart. The higher time frame chart is a time frame between 3 and 5 time frames higher. So I'll start off by looking at some Forex examples here. Here's a chart of the euro against US dollar. We'll be looking at some other ones in a bit as well. And you can see we have a VS setup down here at the bottom. So how do we know whether that was a good trade setup? We also have some sells here as well. Well, if we go to the higher time frame, which on a 4-hourly chart would probably be a daily. If you're, say, trading 3-minute E-minis, you'd probably go to the 15-minute chart. If you're trading dailies, you'd go out to the weekly. Now I want to go back in time a bit. I'm going to use our training mode to go back in time to here somewhere. So what do? We basically go to the previous pivots. Now I'm not going to go through exactly which pivots to use in this because we've done several previous webinars that show you exactly which pivots to take. And they are recorded in the customer section of the MTPredictor customers area of the website. So you can go and review those. But we'll go back to this pivot low. We right mouse click, we place our decision point. Now, can you see how that's on the chart in advance? This is the important thing. We have scanners, we have the market analyzer and NinjaTrader. So you can react to setups as they appear, but we don't want you to get you to react in hindsight or after something comes up in a scanner. We want to get you to be able to predict or anticipate where you need to be wary of what the market's doing for a potential area where setups may unfold. So here this area is on the chart in advance. You see, it's there ready for you. So if I turn trading mode off, can you see what's happened? The market's gone down to that level and then reversed. So in other words, that has caught the low nicely. In other words, the market has done what we anticipated. We project potential areas. We see if the market is reversing at those areas. We then deem the picture is clear. So if we now come down to our shorter time frame, which is the time frame we're trading off, can you see here how suddenly the picture becomes a lot clearer? I'll just use our training mode to go back to show you what it looked like at the time. That is what it looked like at the time. Can you see how suddenly that VS setup looks to be a lot clearer rather than these ones back here where you don't quite know what's going on? In other words, the market is indeed making a reversal at this level. So this is the primary thing we do. We look at our DP levels first and foremost. Why? Because that's the area where the markets are making probable reversals. We then use our MTP trend as our second indicator. In other words, we look to see whether this is also confirming that the market is in the anticipated direction. In other words, is this either blue or gray? Gray shows the period of making at a point where it's likely to make a reversal. In other words, is it going with where the large trend is indicating as well? So here we're indicating support. The market is likely to go up off that support. Our MTP trend is agreeing with that. Therefore, this is a good trade to take. We right mouse click, do analysis. That then gives us a potential trade setup. Remember, we use position sizing to keep our initial risk small and under control. So when the setups are wrong, in other words, when the losses come through, the losses are kept small at one risk unit. Why is that important? Well, it's important because over time, we hope to make profits that are large, not just in dollars, but in relation to the initial risks. In other words, large profits and small losses. So does everyone get the basic idea of what we're trying to do, in that we don't have a black box system because markets are random half the time, therefore black box systems don't work. We go to the higher time frame. We then place our higher time frame DPs on the chart and then see whether the market is indeed making reversals at those higher time frame support and resistance zones. We then double check with our MTP trend to see that color's in the right direction. And that's how we approach trying to find the trade setups. So for example, these ones wouldn't be very good because first and foremost, they're against the blue MTP trend and there's no nice support or resistance areas where they're coming off against. In other words, the picture's not clear there, but it is clear here. So does that idea make sense to everyone, in that we're basically using the higher time frame chart to see whether the picture's clear and then only look to take trade setups when we have a clear picture? That's the basic idea of what we're trying to do. If I turn training mode off, you can see the market went up. It got within a smidgen of that target. So this is probably a good example to take because it wasn't a perfect example that worked out in hindsight absolutely brilliantly. Because again, the markets aren't like that in real life. So when we teach here, we want to show you examples that sometimes aren't ideal. So here's a question for you. What do you think you might want to do if you're within a smidgen of your target and it hasn't quite got there? Well, the sensible thing to do is to start to trail just below the previous bar's lows, like this. If you had have done, then you'd have been stopped out for a 1.8 hour profit. Exactly, Ravar. Move to 1 bar trailing stop. If you've got our NinjaTrader 8 add-ons, I know this one here is not the same market. This is E-minis, but if you've got our trade module in NinjaTrader here, what you can do is if you're in a trade, you can then, on this section here, you can then change your trailing stop to bar. Do you see that BAR? That then basically will move it every time a bar closes to 1 tick below the recent bar high or low, depending on what direction you're doing. So you can then do this very easily with our MTP trade module if you've got the NinjaTrader add-ons with this as well. So that makes it just nice and easy. So, that would have been a reasonably good trade. It was just slightly less than 2R, but it was a profitable trade. Should we have a look at some of the other cross rates? US dollar, Swiss franc, well, there's nothing really going on there, so there wouldn't be anything happening. British pound, again, there's nothing really happening here because the markets aren't at higher time frame support and resistance. This is an interesting one. This is some analysis I did earlier. So here, this is a 4-hourly chart. And you see we have a TS3 buy setup. So would this be a good setup? Well, we go to the higher time frame chart. Remember, before this swing had even got there, we'd have gone back to the previous high or low, we'd have placed our DP on the chart and then seen whether the market made a reversal at that level. We then go back to the chart we're looking to do on and see here, you see it reversed at the level. So in other words, the market was doing what we anticipated. It came into the support zone. It then made a rally off. The market, the MTP trend went from gray to blue. Do you see it's blue here? So that indicated the large degree trend was now up. Therefore, this TS3 buy setup was now in the direction of the large degree trend. We placed the analysis on. So this would be a good trade setup to take. At the moment, you can see it's probably at a slight loss. Again, we're one of the few trading vendors to actually show trades that probably aren't all perfect because that's not the way the reality is. There will be losses. There will be times when markets don't do what you anticipate. But the trick is, if it doesn't go as you anticipate, to then use position sizing, which is what we have here, to keep these losses small at 1R. So if this goes wrong, this will be a minus 1R loss. If it goes right and it goes up to the target, the profit will be almost 4R. Let's call it 3.5 for easy maths. 3.5 or 3.8R. So the profit will be 3.8 times greater than the loss if the loss came through. And that's what we're trying to achieve with MTPredictor. We're trying to achieve a small slice out of when the picture becomes clear, having profits that are large and losses, but those losses are small. So do you see what we're starting to do here? Let's go, just skip down these. No particular clear pattern there. No particular clear pattern on that one. You can see that wasn't really coming off anywhere. No particular clear pattern there. Let's see if these would be any good ones. Well, instantly you can see they wouldn't be because obviously our MTP trend is red. So even if it was coming off support, the MTP trend wouldn't be agreeing with it. So they wouldn't be good ones to take. Euro GBP. This is interesting because there was a VS buy setup there, but let's go to the higher time frame chart. That would be the, oh, by the way, you remember those ones that worked really well. That was the ones we've seen in previous webinars, wasn't it? Where that was a weekly support, that was a weekly resistance, and that was our W3 trade setup, our daily one in that direction, and that worked out really, really quite nicely. But we won't look at that one in this webinar. We've seen that one before. So you take our DP off here, and if we go back to the time frame we're looking to trade off, can you see how we haven't reached it? So even though our MTP trend is blue, we weren't coming off higher time frame support. So these trade setups were not ideal. So in other words, the picture wasn't clear when these came through. So these probably weren't good ones to take because you weren't coming off higher time frame support. Let's have a look at the Euro Canadian dollar. Slightly different situation. If I go out to the higher time frame chart, there's the last pivot high. So you right mouse click. Remember, this DP would have been on the chart before it got there. So before the market got there, you'd have had that resistance zone on. So when you were on the time frame you were looking at, you'd have seen that the market went up into that higher time frame resistance. Here's our red sell bar. Our MTP trend is gray, so it says it's in the process of making a reversal. So this would be a good one to take. The market is now in the process of going down. So this is a trade that's open and is going with you. But again, we use exactly the same process, in this case, on a short trade. Not much going on that one. And again, not much going on there because that TS4 was in the middle of a trend. Let's have a quick look on the E-minis from yesterday. In fact, actually, let's go out to NinjaTrader and let's have a look at the micro, the MNQ from yesterday. So I want to have a look at this from yesterday. So exactly the same approach again we take is here we have some automatic setups on the charts. Now the question is, are they good setups? Let's have a look at this VS buy setup to start with. So a 3-minute chart, you'd go out to the 15-minute for your higher time frame to start with. There was the last pivot low there, right mouse click decision point. So that would have been on the chart there before yesterday even opened. Do you see that? Before, you know, when you're right back here somewhere. So before the market even opened, this would be an area of potential support. So what happened on the 3-minute chart? Well, it came down and look at that. It caught the very low of the day for you there. So this VS setup was a good one to take. Just right mouse click, do analyze trade setup into the first target there for a profit of 3.4R. I've used the micro E-mini here, and where we have 0.5 per tick, because obviously this is quite a big move here. So even on a $20,000 account, this is only 7 contracts for the micro. But the point being is it came up to this level here where you would have had a profitable trade of plus 3.4R. But exactly the same approach we're taking, in that we're looking to come in at the higher time frame support and resistance, to then take trades that fall in that direction. Let's have a look a bit later in the day. There's the last pivot high. See, the market went up into this level here where it started to find resistance. So let's have a look and see what happened. A bit open. Yeah, Mazir was quite close to the open, so some people would be a bit skeptical about that, but you know, nevertheless, it shows the technique. It shows the technique of what we're trying to do in that setups unfold at higher time frame support and resistance. So then it comes into this high here. So there was a setup here. I'll just move that out of the way a bit. But this was what's called a DP setup. A DP setup is where we're looking to come in at the reversal of a new high. So that didn't look very logical because ideally we'd be looking for some kind of ABC setup here, which didn't unfold. Same with this one. This was a VS setup. Now, if you have been with us for a while, you'll know that a VS setup is ideally a breach of an important psychological high or low. So this one here is a failure at that major low there. This one would only be a failure of this little swing pivot here, not of this major high. In other words, ideally, we want this VS setup to unfold off a failure at that previous high there. It didn't. So those two wouldn't really be ideal setups. So let's move forward. The one that might be interesting is because we had resistance here, the market was then going down here. Our MTP trend was red. So we did actually have a setup a bit later here in the day there. That would have probably been a good one to take because the largely trend direction was down. This would have actually been a losing trade. It's important to understand that losses can and will and do unfold. No matter how good your trading approach, the losses will come through. So the point being is that even though I've shown you some good trade setups that are working out quite well on the Forex charts, this one here would have been a losing trade. But that loss would have been kept small and under control by just being minus 1R. Ray's been asking about tick charts. If you want to use tick charts, to use what tick intervals is up to you. I tend to use the 3-minute and the 15-minute. So if you're using tick charts in NinjaTrader, just experiment to find out what tick intervals work best for you. That's the best advice I can give. But don't go too short, shorter time frame. it's very tempting to go for a low number of ticks in a tick chart and end up with almost like a 30-second chart or something, which is a bit too short. So just be careful on what you're looking at there, but just do an experiment to see what works for you. The only thing I'll say on these setups here is, in isolation, these look quite good. But if we go to the E-mini, the ES, and go to the higher time frame chart in the ES, the only thing that was in the back of my mind yesterday was, where are the DPs on the ES as well? Now we don't tend to we don't tend to want to have all the E-minis exactly the same. But one thing that was slightly in my mind was, if I go back to here somewhere, is you'll all know that the primary DP that I like to use is off the last swing into a high or low. I've taught this so many times. So I just want to make this really clear again here. Here's the last low on the ES. That is the last swing into the low, okay? So this is the DP to use off here. So this DP is the most important one. So if we actually now turn training mode off, you can see that basically yesterday the ES hadn't reached that at all. And it's really a lot more obvious if I go down to the 3-minute chart. Look at that. That's what the ES was doing yesterday, basically rallying all the way up into that 15-minute DP. So at the back of your mind, you'd want to be watching that and saying, well, actually, you know, the ES hasn't got to any position where you'd want to think that a reversal is going to occur. So if you were trading the NQ, particularly back later here, it's just at the back of your mind, you want to be a little bit careful. That's the only thing I will say. And that's quite an advanced point. And it's something that you'd probably come onto as you become more experienced with the software, particularly when you're trading the E-minis, is it's nice to have them doing the same thing. You know, not that they have to be absolutely identical, because they never will be identical. But if it's obvious that one of them, like the ES, hasn't reached support or resistance, then just be a little bit more careful about trading the other ones. Not saying you don't, but you know, just be a little bit more careful, if that makes sense. Yeah, so it was fairly obviously the opposite. So, you know, here, going up here, it was fairly obvious the opposite. Before I leave this one, for you guys who are really experienced, okay, and have been following me and learning exactly what these setups are, there will be some times when you get a situation like this. That our market here is on the way up, you can see. We know it's on the way up, so I'm just going to do this just for a second and have a look at this. For you guys who are a little bit more experienced, what is actually going on here? On this bar here, with that red high volume spike there. Yeah, it's starting to make a VS. If you place a DP off this low here manually, it comes in right at that level. If I move forward a bar, it then fails to follow through. So there are sometimes when the software will miss a setup. So if you're an aggressive, if you're an aggressive trader, if you're an experienced trader, and you see something like this, okay, you could then go out to that previous high, and this is where you can use your manual risk reward. This is why we have the manual options in the software. So you come back down to here, so risk reward, you can then click on the bars you want to build your own risk reward around, and you can build the trade setup manually. So that's something that we can do in the software for the more experienced users among you. Now, I'm not saying if you've come into the software new that you really want to start doing this quite yet, but because we teach what particularly the VS setup is, and there is other recorded webinars in our member section that go through the VS setup. But, you know, for you more experienced users, and there's quite a few of you there, just keep an eye on things like this, particularly when you have a situation like this of where you can see an obvious low, you can see an obvious high volume bar, and then the next bar, you say to yourself, well, actually, that's what Steve teaches a VS setup is about, particularly when you haven't reached the higher time frame resistance, the large degree trend is up, and it's all coming together. So in that kind of circumstance, you can then use your own experience to then build one of your own trade setup in and around that. So that's just a tip for the more experienced among you. Yeah, TJ said exactly right. So if the market doesn't move with you, then the VS setup, you've got to be sort of slightly worried by it. So here you can see it did. That reversal at that level was a move round, was a fake out. I mean, how many amateurs would have been selling that there just to see the market reverse back up before that big move? I mean, if you're really aggressive, you could have seen the MTP trend had gone strong. In other words, it had gone beyond our strength barrier there and actually then rode it up into, using the ATR stop, which is our blue dots, rode it up into the high as well. So there are lots of other things you can do with the software, not just with our automatic setups. I mean, I teach a lot about our automatic setups, but I just wanted to show you that there are, once you understand what our automatic setups mean, there is ways that you can take your own analysis above and beyond just the automatic setups on your understanding of how the markets unfold. So that was just a nice little tip for something that unfolded yesterday for you more experienced guys. Yeah, it's just, Mazir, it's just that if you are watching the markets and you see something obvious like that, an obvious break of an obviously significant previous high or low, and the volume has spiked up like this, and then it reverses on the next bar, you'd expect that to be a VS setup. The only reason it wasn't a VS setup is because it wasn't coming off. There's another swing in here, so the software missed it because there was that swing there. If that had been one swing up there, then that would have been printed as a VS setup. This is where this is where you put rules into software. It doesn't always catch everything. Nothing's 100%. Mark asked about in NinjaTrader 8. Let's just go to NinjaTrader 8 on the ES. Let's have a look at exactly the same situation there. You can see if I do the cursor, where is it? There it is, exactly there. There's the bar. There's the little high, there's the VS spike there. By the way, if any of you guys were trading the 5-minute chart, the 5-minute chart was actually a W3 trade setup. So Mazir, if you actually had your scanner running or your market analyzer running, and you'd seen the VS setup come in manually on your 3-minute chart, and you'd said, damn it, I missed it. It wasn't printed as a VS setup on your 3-minute chart. If you had your scanner running and you had your 5-minute in there as well, you'd have seen that it would have been a W3 trade setup on the 5-minute. And if you'd then place your analysis on there, that would have been a very nice trade into close to catch the rally. So that's another tip there, if you're a bit more experienced, is that when things like this happen, there could be a setup on a slightly higher time frame that catches it absolutely perfectly. There you go. Mohammed, the ETH and RTH charts are, ETH is extended trading hours and RTH are regular trading hours. Regular trading hours on the USE minis are from 9:30 to 16:15. It's what us old school traders call the day session, where basically the US market is open. It opens at 2:30 UK time, 9:30 New York time and then closes at basically about 4 o'clock, but the futures run till 1/4 past. So that's what we actually do, the regular trading hours, in other words, the day session only, which have the gaps here. But so many people as well use the 24-hour charts on the E-minis as well to help confirm markets. And we've talked about the difference between the two quite a lot in the past. And maybe we'll go on to discuss that in a future webinar. I don't want to get into detail on that there. Mark, I'm not quite sure what your question is. Position sizing. So this is your position sizing you have here. So when you say your position sizing is not working, I'm not quite sure what you mean. So the position sizing, you can change this in NinjaTrader. If you go to Tools, MTPredictor, and then do Settings, here we have accounts. So you can set up different size accounts if you want. Do you see that? There's the different size accounts there. You can set those up and they are then available underneath the drop down at the top. So here I've got a default account, which is 20,000 US dollars. Our risk profiles here show you what percentage risk you're taking on whichever asset class. So futures, I'm suggesting 2%. So I'll just cancel out on that. And then you can see here, if you change the account size, so if I say go down to a $10,000 account, you can see obviously on the main E-mini, the risk will be exceeded because the risk is $200. So you can change the different account size there. And then what it will do is it will work out the correct position sizing, i.e. number of lots, contracts or shares based on your percentage risk for your different account size. And as you can see, it comes out on the analysis as I've done just there. Right mouse click, analyze trade setup. Does that help then, Mark? Oh, this one here. Do you mean this window? This is our trade module. This is our trade module here. So if you've got this in our Pro version, what that means is it will take the position sizing, which is here, and it will put it into the trade module. Okay. So if you were trading this setup, what it will do is then take that position sizing, and then it allows you to, if you click on the trade button, it will then place those orders for you. So in this case, it will be going long 1, which is correct, going long 1 at 0350 at 0350. So it just means it places it quickly for you. Once you're in a trade, it will then place the target order and the stop order. One thing I want to tell all the NinjaTrader users is, go and see these numbers. You have to make sure, first and foremost, that you have some analysis on. So if I clear everything off, you see if there's no analysis on your chart, you'll have no numbers in here because there's nothing to take it from. The way it happens is first you place the analysis on. Okay, once the analysis is on, this then reads these numbers. So the analysis has to be on first, then it takes the numbers and then uses those to then build your trade orders. Okay, so it uses our MTP risk reward numbers. Now these are not tied to the actual orders, because when an order comes in on NinjaTrader, you'll see the absolute order lines in NinjaTrader as well. Okay, now if you want to change an order in NinjaTrader, you can grab and drag that order. You can't see it here because obviously I haven't got an open position, but those order lines are not tied to our MTP risk reward numbers. Okay, so if you wanted to grab and drag an order in NinjaTrader, that will move independently of our risk reward numbers here. So just grabbing and dragging our MTP risk reward lines will not move the actual orders in NinjaTrader. They're not connected like that. It's a one-way connection if you think about it. First, our position sizing is done. It then takes those position size numbers and puts them into our trade module, and then the orders are placed. Full stop. That's it. Once the orders are on NinjaTrader, you can then move them, but this risk reward line will not move with them because it's not connected to the orders. For you guys who are not using our MTP trade module, that probably won't make sense, but any of you who are using our trade module, you've probably seen that happen and you'll probably want to know why. The reason is we don't have our MPT risk reward lines tied to it, because you might want to do some further analysis. So if, say, you're in a trade here and you've got an order working, you might want to say, well, what happens if I want to change, this level? You might want to move this around yourself and just say, well, that would be 6R there, that would be 4.2 there. So you can do your own sort of analysis before deciding where to actually move the orders. We've done that deliberately. So it means that it doesn't mess around with your orders that are actually working, because once you have orders working in NinjaTrader, you don't want to keep messing around with them, because that just defeats the object, doesn't it? So that's why the two are not connected. And I know quite a few people always get confused by that and wonder why, but hopefully that makes sense why we've done it that way, and why if you want to move the order itself in NinjaTrader, you can by grabbing and dragging it, but it's just independent of our blue risk reward lines. Hopefully that makes sense to you guys. Karen, it's always a good idea to see the DPs on the higher time frame charts. That's the best way to do it. So remember, on this one, what you'd be doing is you'd have a higher time frame DP off that previous pivot, and you'll be using that as your idea of where you think that yesterday, of where you think is likely to go, and you'd use that. Good question about today. You see the market's open today. What would be the position today? Well, here's our higher time frame resistance area. It's now gone through that. So of course the picture's not clear. If anything, the market trend is up. It might well be up until that next DP up there, off that major pivot high there. But the picture is not that clear. It's not as clear as it was previously. So Mark, what we're doing is we're looking to put our DPs on our higher time frame chart, which is what we were talking about earlier. I mean, Mark, were you in the webinar when it started? If not, I suggest reviewing it right from the beginning. Then you'll actually see what we were looking at. I was looking at some Forex charts, but exactly the same approach you do on the E-minis is that you go to the higher time frame chart, you place your DPs on from the higher time frame chart. I do recommend going into our customer section of our website and then looking at the recording of the webinar that talks about which pivots to use. I can't remember what the title is now because I haven't got it up, but it will be obvious that it says, I think it was about 2 months ago, about which pivots to use. You use that to then place your higher time frame DPs on the higher time frame chart. You then go down to your time frame you're trading, and then you can see where the market lies in relation to those DPs. So like today, you're in no man's land. You're here. There's your next resistance. You've gone above this resistance. So what's the picture? As I always say, if you can't describe what the picture is or the larger trend is within 2 seconds and it's not obvious, then stand aside. That's when we deem that the market pattern is unclear and we need to be standing aside. If you can see that you're obviously coming off higher time frame support and resistance, you should be able to see that within 2 seconds. If you can see it within 2 seconds, the picture's clear. If you can't, the market is then in the 50% of the time that's random, and that's when you want to be standing aside. And I think the whole idea of not being able to see a clear picture, i.e. looking at this and saying, well, I don't know what's quite going on. Most amateur traders get confused there. And I think that's what I want to try and straighten out, is that the best way to trade is when the picture is not clear, is to stand aside. And I think most amateur traders find that hard. But once you've got the hang of doing that, that's the step up you need to make to then become a professional trader. Trading is about patience and not trading the whole time. It's about patience, waiting until you get the ideal setups. That, I think, is what so many amateur traders find hard, and that's why so many of them actually end up failing. So this is why we do this. If the picture is not clear, you stand aside. Once it is clear, you then look to trade in that direction. By the way, Mark, just to clarify, on NinjaTrader, you have to be on the same chart. So here, I'm on this particular chart where I'm changing it from 15 minutes to 3 minutes. So I know in NinjaTrader, you can have other charts that have the same symbol, but our DPs don't show on all the different other charts. It only works on the same chart that you're working off. In other words, don't have a 15-minute chart and a 3-minute chart open elsewhere, then expect the DPs to show across all of them, because it doesn't work that way. It only works on the current chart you're working on. So that's, again, something that some people find confusing when they first use our tools. Hopefully that then helps you on that one. Right, I've now run out of time now, but are there any questions in the last couple of minutes before we wrap up today's webinar? If there are questions, I'll try and get through them now. If I can't get through them all, send me an email and then we'll cover them in the next webinar. But hopefully it's been a good introduction to broadly how we approach it. Yes, Mark, we do this every Tuesday. Every Tuesday is a free webinar. Every single one of them is recorded, and then you can review them in the member section of the website for the next sort of couple of months. We then keep the most important ones that you just can keep reviewing again and again and again. It's free. We don't charge you for it. We don't expect people to pay more and more and more. You know, once you subscribe, you know, we're not here to try and give secret sections that make you pay more and more. You know, I don't like companies who do that. It's I think it's just ripping their customers off. It's just not fair, really. So, you know, we've been doing these webinars for 7, 8, 9 years, I think, every week. MTPredictor has been going since 2001. So, Mark, we've been in this business for nigh on 20 years. As software vendors, I've been in it for 33 years. So, a lot of experience here. So, hopefully you've all enjoyed having another overview of the market, or overview of how we view doing the MTPredictor analysis, and hopefully that helps. Again, for you new customers, I do recommend going into the customer section of the website, reviewing some of the other training webinars as well, because it helps just to see these training webinars again and again and again. And the thing about MTPredictor is we haven't got lots of tools and trades and setups, because the idea being is we don't want to keep moving the goalposts. Is what we do here is we wait until the market picture becomes clear. We wait until the market comes to us. We've done exactly the same trade setups yesterday, the day before, the week before, the month before, the decade before. You know, I've looked at setups here going back to when I started trading back in '87, exactly the same patterns. 1929, we've had a look at that crash. We had exactly the same setups there. I've actually looked at some daily charts a week going back to 1201. Exactly the setups unfold. So what we're doing is the same yesterday as we'll do tomorrow, as the day after, as we did last week. In other words, we're looking to do exactly the same consistent thing. Basic markets don't change. They really don't. They do the same thing again and again. But the trick is understanding that half the time markets are random, and that's when you want to be standing aside and not trying to force the situation and trying to see something that's not there. That is the mistake that most people make. So wait until the market comes to you and the picture's clear, and that is the trick to using MTPredictor. Right, so I hope you've all enjoyed today's webinar. We'll be back again next week to carry on and perhaps going into a bit more depth in a few things now, because I know there's quite a few new customers with us this week, but we'll start to take things into a bit more detail next week with having a look at some other markets. So hopefully you've all enjoyed it. If there are any questions, do drop me an email, steve@mtpredictor.com, and we'll look to try and include them next week, or I'll point you to places on the website where they've been answered. And, you know, look forward to you all, your journey with MTPredictor and becoming more experienced and taking markets to higher levels with your analysis. Right, thanks very much, everyone. Have a good trading week, and we'll be back again to do it all next week.